Hello and welcome to Trade with the Knight. I'm your host, the Black Knight. Today is Wednesday, October the 3rd, 2007, and we are waiting for the UK Services PMI report to come out. That's why we're watching the pound dollar, and since we're trading news, I prefer to be on the 5-minute chart for this. Let's take a look at what price has been doing for most of the morning. You see it's been bumping up right up against this 200 simple moving average. It's been acting as pretty good resistance for us, as it often does. It's gone up over a couple times, but not really convincingly. For most of the morning, we've been under this. That tells us the bears are more or less in control for the day. And we also see that just prior to the news, price has already started creeping down. It's actually tested this previous low here and already crept back up, leaving us a slight wick. That kind of indicates that people are starting to take short positions just prior to the news coming out. Perhaps there was some information leaked, or for whatever reason, maybe speculatively, but people are already tending to favor the short side. We don't quite do that here. We prefer the safe and dependable trades, so we're actually going to sit out until 5 minutes after the news comes out. I want to see a full, complete 5-minute candle, because that's going to tell us the story and help us predict what might happen next. Let's take a look at how we do that. Here's that first 5-minute candle. I'm just going to move this over a little bit more so we can see it. There you go. It's a sharp move down. Now don't worry, it's not getting away from you. One thing about Forex is more often than not you will get a second chance. Not always, but more often than not. So we sit out this candle entirely. We resist the temptation to get in short. What a lot of people do is they get in short right around here, and then they sit uncomfortably as price starts moving up, up, and away from them on the retracement. We're going to avoid that temptation. Instead, we're going to take our Fibonacci tool and we measure from where the candle started to down to where the candle ended, which is right here. And what you can see happens is we plot some numbers. 0 is where we let go. 100 is where we started. Since it's a down move, we measure in the downward direction. If it was an up move, we would start at the bottom and measure up. What you see is a series of numbers counting up from 0 to 100. This shows us the retracement level. You can see here price has already started moving up, and this shows us how much it's retraced. Below the 0, we see numbers incrementally going up. These are the Fibonacci extensions. If the retracement finishes and we get a second move, which is what we're hoping for with our particular strategy, then this measures the extensions, and these numbers count up now from 0. 118, 127, 138. This is how your fibs will look if you're using most popular charting packages such as eSignal, VT Trader, TradeStation, I believe, looks like this. MetaTrader, which is what we're using here, tends to look a little bit different by default. And if you happen to be using MetaTrader 4, if you go on my website, fxKnight.com, and on the left-hand side, if you click Resources and then click Downloads, you'll see a file there called fibo.pdf. That'll tell you step-by-step how to adjust MetaTrader, so you can look at your fibs exactly the same way we're looking at them here. So let's take a look. You can see the retracement came up and stopped right here at 61.8. Funny enough, also on a Fibonacci level. 61.8, I know you can't see the 6, but take my word for it. It's right here at 2.0395. And you can also see that the retracement has kind of come up, and now it's slowing down. This is the point I love to catch, right when it comes up. Starts to slow down, and maybe this downward momentum is going to regain control. So let's take our entry going short right here at 2.0395. Now, whenever trading news, I advise to have both a stop and a target in place, because sometimes price moves very fast. It can get away from you. Brokers can give you bad fills. So let's hard code that stop and that target. That way we don't have to worry about it. We have a nice round number here, and it's also where a lot of these tops level off. That's 2.0400. That should act as pretty good support, or or pretty good resistance for us. So I'm going to set my stop just a little bit above there at 2.0404 or 05, somewhere around there. If price is going to prove me wrong, then let it prove me wrong. That's going to be my stop. My target I'm going to put down by the, since we retraced to 61.8%, I'm going to put my target at 161.8%, which, funny enough, coincides with also the S1 pivot point. Anytime you have a pivot point and a Fibonacci level overlap like that, that's going to be a pretty strong support or resistance level. So you want to put your targets there. In this case, what I'm also going to do, I don't always do this, but as you can see, some of these prior candles just before the report have been fairly small. Since they're 5-minute candles, we're almost going back an hour here. They've been pretty short movements, so this represents a big increase in volatility, as news often is. It's also a sharp increase in volume, as you can see here. So what I'm going to do is I'm going to set my first target at 161.8. If that gets hit, I'm going to move my stop above break even. I think in this case probably around here. I'll move my stop to somewhere 0380 or so, and I'm going to have a second target around the 261.8 Fibonacci level. For the remaining second half of the position. Let's see how that would have played out for us. You can see the first candle already starts moving down. We're already, doesn't always happen that fast, but hey, I'm glad when it does. That means we're not nervous. It's moved down. We're already below our entry point. We're already in the positive, and we're content to wait and see what happens. Here comes that second candle. Look at that. Bam. Slams right down, touches the 161.8% Fibonacci. If you would have only had one target, it would have taken you out there already. That's a great trade. If you only trade with one target, that's fine. That's a 26 pip trade in under 10 minutes of trading. You can be very happy with that and walk away and go on to finding the next great trade. There's no reason to struggle. The great trades will always jump out at you from the chart. Don't ever struggle or try to squeeze out a trade. 161.8 is already fantastic. What we did in our case is we took half of our profit here. We closed half the position. We moved our stop to 2.0380, and we waited some more to see what the rest of the move brought us. As you can see, we're continuing down, and there you see the second candle came down and slammed right down at 261.8. You see, in both cases, we were right next to key Fibonacci levels, and also you can see here we also line up with key pivot points. This is the S1 pivot point, and this is the M1 median. So whenever they overlap like that, that's going to be pretty strong levels. Our second profit target would have taken us out right here for an additional 45 pips of trade. 26 plus 45, that's 71 pips in 1, 2, 3 5-minute candles. That's 15 minutes of trading. You can't ask for a better trade than that. And be sure you stick to your targets, folks, just like we stick to our stops. Don't move them. Once that gets taken out, take your profit, be happy with it. You can see we poked a little bit below that, but let's take the safe money. Because if I forward this on, you can see price retraced pretty quickly. You would have given up the second half of your profit. So when your profit targets are hit, take them, be happy with them, and celebrate your success. Celebrate a trade going exactly as you planned it. And even when trades go against you, if it hits your stop, it's still a trade going exactly how you planned it. So as long as you followed your plan, that's something to celebrate as well. In this case, we have a double winner, 71 pips in 15 minutes of trading. That's fantastic. And you can also see in the next half an hour that followed after that report came out, we came right back up to that 161.8% Fibonacci. That also coincides with the S1 pivot point. So we retraced to 61.8, and we came down to 161.8 in the end. We touched 261, but eventually price did settle at 161.8. 61.8 to 161.8. That's how it works, and that's how we like to do it here on fxKnight.com. Thank you for joining me, and I hope you'll join me in our live chat sometime soon. Take care.